So today we're going to try and decode one of the most complex and fascinating companies out there, Larsan and Toubro. Whether you're a seasoned investor or just curious, understanding a giant like this is a masterclass in company analysis. Let's dive right in.
Look, to really get a handle on Larsan and Toubro, or L&T as most people call it, you first have to wrap your head around just how massive this company is. I mean, this is a company that builds pretty much everything you can imagine.
We're talking about the metros you might ride to work, the airports you fly from, all the way to some seriously sensitive stuff, like nuclear plants and even military hardware. The sheer scope of what they do is just mind-boggling.
And that, right there, is the big question, isn't it? How on earth do you even begin to put a value on a company that does so much? So think of this as a detective story. We're the investigators, and we're going to follow the clues together to crack the case of L&T.
Okay, first things first. Let's meet our main character in this investigation, Larsan and Toubro, a true industrial behemoth. So, its rap sheet? Pretty impressive. L&T is a total giant in engineering and construction, with a market cap of over 5 trillion rupees. Yeah, you heard that right. It's what investors call a large cap stock, basically a huge, established player. It's also considered low risk, which just means its stock price doesn't go on a wild roller coaster ride like the overall market. So the takeaway? It's big and it's stable.
All right, every good investigation starts with a look at the initial evidence, right? For us, that's the ticker tape scorecard. Let's see what our first clues are telling us. Okay, clue number 1. Performance is rated as just average. That means the stock's price return has been kind of middle of the road. Not bad, but not amazing either, which, is a little weird for such a powerhouse company.
All right, next up, clue number 2, valuation is high. So the scorecard is telling us that L&T looks a bit pricey compared to the market average. It seems expensive.
And then we get to clue number 3, low growth. Apparently, the company's financial growth is lagging behind the market. Now, this is a big one. We definitely need to dig into this.
But hold on a second. Here's where things get interesting. Our first contradiction. Clue 4, profitability is high. So get this. While its growth is low, the company is actually really good at turning its sales into real profit. Super efficient.
And the plot just keeps on thickening with our last clue here. The entry point is rated good. Now, what does that mean? It means that even though the stock seems expensive, it's not in what's called the overbought zone. So weirdly, it might still be a decent time to get in.
Okay, let's just pause and recap this mystery, because it's a bit of a head-scratcher. We've got high profitability, but low growth. A good entry point, but a high valuation? These clues almost feel like they're fighting each other. So what on earth is the real story here? Time to go deeper.
All right, it's time to put on our forensic accountant hats. We're going to follow the money and look at the hard evidence behind these confusing clues. Okay, let's start with the top line, revenue. And wow, just look at this chart. You can see a clear, powerful upward trend. The company's total revenue has been climbing steadily, hitting over 2.6 lakh crores. That's lakh crores in the 2025 fiscal year. So whatever else is going on, the sales machine is absolutely humming.
Okay, now this slide is where we start to crack the low growth mystery. Check this out. On one hand, L&T's revenue growth is almost 12%. That's actually better than the industry average. So they're selling more stuff than their competitors. But, and this is the big but, look at the net income, their actual profit. It's only grown at about 9.5%, while the rest of the industry is soaring at nearly 28%. So the takeaway is, L&T is great at making sales, but it's struggling to grow its bottom line profits as fast as everyone else.
So who owns this beast of a company? Well, this chart makes it pretty clear it's not some family-run shop. You've got domestic and foreign institutions. We're talking big players like mutual funds and investment firms owning a whopping 63% of the company combined. It's professionally managed, which honestly is what you'd expect for a company this huge.
So we've looked at the past, we've looked at the numbers. Now let's pivot our investigation toward the future. What are the leads telling us about the risks and rewards that lie ahead?
Well, for starters, the experts seem to love it. The consensus is overwhelmingly positive. Out of 29 analysts covering L&T, a full 90% are saying buy this stock. That's a really strong vote of confidence from the market.
And this slide right here, this is a huge reason why those analysts are so bullish. The company is sitting on a massive pipeline of future work.
Their order inflows, that's basically new contracts they've signed, grew by an incredible 45% year-on-year. That tells you there is just enormous demand for what L&T does.
But, as they say, with great reward comes great risk. And here's the catch. A big chunk of that huge order book, about 37% of it, is coming from the Middle East. And if you've been watching the news, you know there are rising geopolitical tensions in that region, which could be a real problem for a company with so much business on the line there.
Yeah, and the list of potential headwinds doesn't stop there. We're talking about possible project disruptions from conflict, sure, but also pressure on their profit margins, some revenue drops in their main infrastructure business, and of course, more and more competition. These are some serious challenges they've got to navigate.
Okay, we've gathered the clues, we've examined the evidence, and we've followed the money. Now it's time to put all the pieces of this puzzle together and file our final report on Larsan and Toubro. So here it is, the complete case file, laid out for you. The bull case, that's the argument for investing, is built on some really solid ground. High profitability, what looks like a good entry point, that massive order book, and of course, all those analysts saying, buy. But then you have the bear case, the argument against it. And that's all about that low profit growth, the high valuation, the pressure on margins, and that big geopolitical risk hanging over its head. It's a classic story, really. A powerful, efficient giant that's facing some very real, very modern challenges.
And all of this leaves us with one final critical question that you have to think about. For a giant, stable company like L&T, is slow and steady profit growth really enough? Is it enough to justify the risks and that premium price tag? That right there is the puzzle every potential investor has to solve for themselves.